So, guidelines for trading news. Number 1, we enter into a position no longer than 20 minutes before the number is released. Now, the reason why I picked 20 minutes is because I think it's a really nice sweet spot. One of the problems that a lot of people have with news trading is that spreads can widen ahead of a release. So if you're putting your trade on, right, like 5 minutes before the release or 3 minutes before the release, you might get a really bad fill because spreads start to widen. So I enter the position no longer than 20 minutes before the release. Now, I don't really enter much longer than 20 minutes because when you enter longer than 20 minutes, the market's focusing on other things. And that could be, data that's released before. It could be the general sentiment of the market. When we get to 20 minutes before the data, usually the market's focused on the economic release. So from the one hand, you have the focus of the market. From the other hand, spreads haven't quite widened at that point. And so that's why I think 20 minutes is a really nice sweet spot before a number comes out. Number 2, what I like to do here is I like to use a 20 pip stop. Now we're trading the major currencies, and a 20 pip stop, tends to be the sweet spot, I believe, as well for news trading when it comes to, what I call, important economic release, but not the non-farm payrolls of the world, not the central bank rate decisions where 20 pips is really inconsequential. 20 pips is kind of, a good stop to use for, employment reports, retail sales reports of certain countries where you don't really have the spread widen too much. The third guideline that I use is that usually I will use a 20 pip first target. Now, if you ever followed any of my work, I love to use what I call a T1 and a T2, target 1 and a target 2. Now, target 1 is basically what I considered a, close, easily achievable level. And then target 2 is kind of where I trail my stop. The reason why I use 2 targets is because what I find is that the reason why a lot of people are very frustrated with trading currencies is because, their targets and their risk management may be idealistic but not realistic. In the sense that, if you try to maintain this perfect, 2-to-1 risk reward, and let's say, we risk 20 pips, you'll have to try to make 40 pips in this news trade, it can be difficult to achieve because sometimes the currency doesn't even get there. So what I like to do is I like to bag my winners quickly and then try to squeeze the rest out of it only if the market gives it to me. So the way I do that is that, if a currency moves in my favor by the amount that I risk, so in this case 20 pips, then I will move my stop to break even. So I already banked money on the first half of my position. Then I'll trail my stop on the remainder of my position, trying to get more of the move. Sometimes I'll only trade one lot and use 20 pip target, 20 pip stop if I'm busy or I can't focus on it or I've got other things going on. But if I'm, kind of free and I'm trading the news, then I'll use this T1, T2 method. So the final rule, final guideline that I have for trading news is to trail my stop. Well, first, use 20 pips first target, move stop to break even on second half of position. And then I will trail my stop using either a 2-bar low or a 20-period moving average or 3 times risk. At that point, it's really up to you to get creative because that's when you can kind of figure out, what works for your own lifestyle. If you just want to use an absolute stop and just program it into your trading station, that's fine as well. If you want to kind of keep a focus in the position, you can trail your stop, using one of these methods that I mentioned here. So let's talk about the tricks of the trade. How in the world could you predict how economic data could fare? How in the world could you position yourself ahead of a release thinking that it's going to be stronger or weaker? Well, let's start off with the Australian retail sales report. And I am going to pull up the FXStreet calendar. I don't know why my screens always go back and forth, so please bear with me. Okay, so FXStreet calendar. See if I can find a calendar. All right, so up the calendar. Alright, so we had Australian retail sales report released. And as you can see here, the Australian retail sales report was very weak. And it came out 0.2% against 0.5% expected. So, let me pull up my chart. And what you can see here is, let's go up to the Aussie dollar chart. And this number came out, this is a 5-minute chart that I'm showing you of the Aussie dollar. This number came out at 7:30 last night. So, the number came out, let me get my little cursor up and everything. The number came out basically where this candle is. So, if we follow the guidelines I presented to you, we would enter into the trade 20 minutes before the release. So this is a release candle. 5, 10, 15, 20. So we would enter the trade at 101, approximately 30. We use a 20 pip stop. So our stop would be at 101.50. So there was, as you can see, there was no chance that the Australian dollar was going to go there. And because I thought the number was going to be weak, what I did was basically I put a short position in the Australian dollar 20 minutes before the release with a 20 pip stop, 20 pip target. Now, before we actually look at the trade, you may ask me, how in the world could you have predicted that Australian retail sales was going to be weak? Well, let me introduce you to the beauty of PMI reports. PMI reports from countries around the world present to us a tremendous amount of information. And last week, we had a report from Australia, which is a service sector PMI report. And this report has a little subcomponent in there called sales. So all this information is really easy to find. You just type in, let me just go to Google. You just type in Australian PSI, which is basically their equivalent of their PMI report. And you just type in Australian PSI. I just click on the first one. This information is publicly available. It's presented on the FXStreet calendar. I write about it all the time. You can see here, on February 3rd, they released a PSI report. So, on their PSI report, here, let me try to redo this. Alright, so hopefully you can see this now. One second. So right here, we have the PSI report on February 3rd. And if you take a look at this report, let's see if we can find their PR release. It's on their homepage. So if you just go to the Australian AI Group report, and you see down here they have the service sector report. So the service sector report, if you click on the PDF file, it will launch a fuller report and you can see all the details. But if you look at this report, it says activity contracted most notably during January in retail trade. And the PSI report has a little subcomponent called sales. And the sales index that month actually declined from 46.9 to basically 45.4. So since the subcomponents of the index declined from 46.9 to 45.4, and this industry group clearly said that retail trade, which is another word for retail sales, notably contracted in the month of January, that told me that the odds favor a weaker Australian retail sales report. Because this indicator has the word sales in it. If you open up the PDF, and I encourage you to do so, I just don't have my Acrobat loaded into my Windows environment on my Mac here. But if you take a look at that, I'll tell you that the sales components of the PSI report declined retail sales, the same word, sales in it, and that should tell you, or at least it told me, that retail sales are going to surprise to the downside. So that's why I went short. If you take a look at my chart right now, I've just pulled up the Aussie dollar chart. I went short the Aussie dollar at 7:10 p.m. and that was at around 101.30. And within 5 minutes of the economic indicator being released, the Aussie dollar fell to a low of 1.010, I think 05 or so, or even less, 1.0102 or 3. So that shows you how the number affected the currency pair and how it's instant gratification in the sense that, I shorted the Aussie dollar and then it collapsed and the trade was resolved relatively quickly.